and thank you very much for inviting me to present here, and thanks for listening out there. It's really great to be here, and I hope you get a lot of great information from the presentation, and I look forward to hearing any of your questions. My name's Steve Zelin. I'm the Singing CPA. I'm an accountant here from New York City, and I'd love to help with your tax questions. I've been a CPA for over 15 years. I have a small firm that specializes in taxes for small businesses, artists, individuals, and nonprofit organizations. Today in the webinar, we're going to cover two topics. We're going to cover rideshare and your taxes, and we'll also talk about how to make more money. In the first part, rideshare and your taxes, we'll talk about everything you need to know about 1099s. We'll run through a Schedule C. We'll talk about self-employment taxes and the Form 1040. So let's get started. Now, when we're talking about rideshare, now I love rideshares. In fact, I took one to the office today, and it is wonderful. It's a much better experience than a traditional taxi, and it even costs a little less. So continue to do the great work that you do, and I love you, and a lot of other people do too. So what is a 1099? Well, a 1099 is an information return. So it's a tax document. No need to be scared about it. It's a tax document. So when you get the envelope in the mail, open the envelope and keep your records. And you're going to want to compare the amount on the 1099 to your records. Because even though you get a record from anybody, whether it be the bank or a credit card, you need to review the record. And that's true of the 1099. Make sure that they have the right information. Because if the information is wrong, you need to tell them that there is an error. Now, the IRS has over 100 types of payments that are required to be filed and reported on the forms. But for your case, the most important forms are going to be the 1099 miscellaneous and the 1099-K. Now, you should receive your 1099 by January 31st. So if you don't receive your 1099 by January 31st, you should contact the rideshare company, and most likely they'll have it available for you on the website. The 1099 MISC looks a lot like this, and you'll probably pay attention to box 7. Box 7 shows miscellaneous compensation, and that is the box that'll have the number that your rideshare company believes they will pay you, very likely for referrals. Now, the Form 1099-K is another tax form that is used to report the payments from merchant service accounts. And so that is for credit cards. So you don't need to pay too much attention to the boxes for the individual months. The most important box will be box 1A, which will show the gross amount of the payments received from credit cards. And so that is going to reflect all of the income from your rides, and there may be a deduction for fees. All right, so we have your 1099-K. The next thing we'll talk about is your profit and loss from business. So the profit and loss from business is Schedule C. Here on the top left here it says Schedule C. It's what if you have a single member LLC or if you're a sole proprietor for your business, you're going to fill out this form, Schedule C. It's an IRS form, and it's available on your IRS website. And if you use an accountant, then this is the form that your accountant will fill out. And if you had a rideshare business, this is very likely the form that you filled out last year. Now, the top part has your name and your business name. On the upper right, it shows your Social Security number and your business code. And if you have an employer identification number, an EIN, which is like a social security number for your business, and you'll fill it in there. And you see the Schedule C has 5 parts. The first part is Part 1, income. Now, income is the part of the form where you will report that's right, your income. And so we have your gross receipts, and so that'll go in box 1, and that's going to flow through from the 1099s. And so if there are any returns, then they'll go on line 2, and so the line 3 would be line 1 minus line 2, and line 4 is the cost of goods sold, and that comes from a different part of the Schedule C to arrive at your gross profit. So the main part of Part 1 is just filling in your gross income and your cost of goods sold, which will carry forward from another section on your Schedule C. Part 2 shows your expenses. Now, these are the categories that the IRS has for you for reporting your expenses. We have advertising, we have car and truck expenses, commissions and fees, contract labor. So advertising will be for things like your business cards, if you have a website, anything like that. Your car and truck expenses we'll talk about a little bit later, but in general, you can take the greater of your actual expenses for your car that are directly related to your car, or your mileage expense. Now, keeping track of your mileage is usually very, very difficult for people who own a car share business, but maybe we can talk about a way to help you with that. But this is where you would report the expenses from your car or truck expenses. Line 10 would be commissions and fees, so any fees that you pay to the car share company that helps you to line 10 is for commissions and fees, and this is the line that you'll use to report the fees that you paid to your car share company to help you with your car share business. Contract labor will be for anyone that you hire to help you with your car share business. If they're an individual, line 13 is for depreciation and Section 179 expenses. So if you bought any equipment, like a car that you want to depreciate, you can depreciate it using a separate schedule, and also this line. It'll flow into this line right here. Okay. And so this is your Schedule C, Part 2. Going through it some more, we have line 17 has legal and professional services. So if you have a lawyer review any contracts for you, or if you have an accountant help you prepare your taxes because you have your car share business, then the fees that you pay will go on line 17. Line 18 will be for office expense, and other popular lines for owners of car share businesses would be line 24. We have travel, meals, and entertainment. And these are travel expenses and meals and entertainment that are related to your car share business. And we'll talk about that in a little bit. The other item that may relate to you would be a home office. Maybe you're in your car all day and you don't have time to tally up your receipts, and maybe you have a lot of office work that you need to do related to your car share business at home, so you may need to calculate whether you need to deduct some of your expenses for your business use of home on line 30. Part 3 of the Schedule C shows cost of goods sold, and that's more for businesses that have inventory that they sell. Part 4 of the Schedule C is going to be very, very good for you, and so it shows where you're going to include the amount of mileage that you have driven for your business. And so on line 43, it's going to ask you when you placed your car in service for business purposes. On line 44, it's going to ask you the total number of business miles that you use for your business. And there are some other questions on line 45, 46, and 47 about whether you have another car and whether your vehicle was available to be used during off-duty hours. Okay, so here on part 4, again, you're going to report the number of miles you drove using to use your vehicle for business purposes. And for 2015, the standard mileage rate that you're able to use is 57.5 cents per mile for business use. And so that'll be very important for you. It's a 1.5 cent increase from 2014. The next part on the Schedule C is my favorite part. It's part 5, other expenses. Now, can you tell why it's my favorite part? It's my favorite part because it's blank, and it's the part where you can fill it in on your own with all of your expenses that are relatable to you personally. So maybe you have your cell phone. Maybe you need a cell phone for your business. Maybe you have an iPad, or maybe you have subscriptions to car service, car driving, car sharing magazines. Maybe you have other expenses that you get to fill in here. So part 5 is going to be your favorite part too. The next thing we can talk about is self-employment tax. Self-employment tax is the worst tax imaginable if you have a car share business. And the reason is because if you have a straight job, they take taxes out automatically, and your boss, the company that you work for, pays half of the Social Security and Medicare taxes, and you as the employee pay the other half. But when you work for yourself in your car share business, you have to pay both halves. And this is the form that you'll file to pay for both halves. And in a nutshell, you're going to take your net income from your business and you're going to multiply it by approximately 15%. So off the bat, you're going to be paying 15% for self-employment tax, and then we have to figure out the rest of your income tax. So the Form 1040 is the individual income tax return. Now, if you have a different type of entity for your business, for example, if you have a partnership, or you have an S corporation, or a C corporation, then you would file a different tax form. But if you are an individual and you have a single member LLC, or you don't have an entity, you just have it as a freelance business with no entity set up, then you can file a Form 1040. And so your Schedule C, which we just talked about, will flow into your 1040, and this is what the first page looks like of your 1040. You get 200 points for writing your name, and then you fill in your filing status and your exemptions. And on line 12, the business income from your Schedule C will flow into the Form 1040, line 12. If you have other income, you'll be reporting your other income here. So if you have another job where they pay you a wage, that information will flow into line 7. If you have dividends and interest income or any other income, this is where your income is reported. This is your gross income, and it equals your total income on line 22. And so the next part of the Form 1040 are the adjustments to gross income. Now, the adjustments to gross income are on lines 23 to 35. And after we take into consideration these items, your total income from above gets adjusted to arrive at your adjusted gross income. Now, the most important items for freelancers are line, let's see, the most important items would be line 29, self-employed health insurance deduction. So if you have health insurance and you are self-employed, you can deduct 100% of the premiums from your health insurance on the first page of your return right here on line 29 for health insurance. Another very important deduction would be line 32 or line 28. And these are deductions that you can make for self-employed SEP, simple and qualified plans on line 28, and also on line 32 is the IRA deduction. Now these are retirement plans. This is the government's way of giving you an incentive to defer paying taxes to save for a little old person in retirement. So this is a great way that you can save for your taxes. We can talk about that a little later. And this is this is all on your Form 1040, page 1, on the second part. So once we deduct from your total income these adjustments to income, then we arrive at your adjusted gross income. The next part of the 1040 is going to be your deductions and exemptions, and then the calculation of your tax. For the deductions, you get to either take the standard deduction or the itemized deduction on line 40. Now, the standard deduction is pretty standard, and you can see on the left column that the standard deduction for people who are single is $6,200, and if you're married filing jointly, it's $12,500, and the head of household, it's $9,100. Now, most people take the standard deduction, but if you own real estate and you can deduct your real estate taxes and mortgage interest, or if you have a lot of medical expenses and charity, you may be able to itemize your deductions, and so you'll take the greater amount, whether itemized deductions or standard deductions. For exemptions, if you're single, you can multiply $3,950 by 1, so you'll be able to deduct another $950. And if you are married, then it'll be $3,950 times 2. And if you have children that are dependents, then you can get $3,950 for each one of those as well. Then from your adjusted gross income, we're going to subtract your deductions and your exemptions to arrive at your taxable income on line 43. And then using the tax tables, we'll calculate your tax. And so that will determine what your total tax will be. There are some other lines and a lot of other tax credits, but most of them won't apply to you here. On line 57, this is where your self-employment tax will be reported, and this will arrive at your total tax on line 63. The last part of the tax form is the payments and refund and owing part. So after we calculate how much tax you're supposed to pay, then we can look at how much tax you actually paid. On line 64, we show the tax that you had withheld from your W-2 or your 1099s. On line 65, you'll report any estimated tax payments that you made or refunds that you applied from the prior year to this year. So once we compare all of the payments that you made to your total amount of tax, then we'll calculate whether you are getting a refund or you have to pay. And that's basically how the 1040 works. The next section we're talking about is how to make more money. Now in this section, we're going to talk about how to calculate the taxes you owe using Hurdlr, what are business expenses, and ways to save money and pay less tax. how to calculate your taxes using Hurdlr. Now, Hurdlr is a very cool app that you can download to your phone, and you can use it to download and link all of the income coming in and all the expenses going out of your bank accounts and credit card accounts. Hurdlr also automatically tracks your mileage. And after you have all that information in Hurdlr, it's going to slice it and dice it, and you'll be able to export that data into a beautiful format so that it'll be easier for you or your tax preparer to prepare your taxes. Now, what are business expenses? Well, the IRS's definition of a business expense is anything that is ordinary and necessary for your business. Now, for you and your car-sharing business, that may be everything and anything. But if it's something that's a prorated amount, like your phone, if you spend 50% of your time on the phone with your friends and 50% of the time for business, then you would allocate 50% of your phone bill for business and 50% for personal. And certainly if it's more than that, like 90% for business and 10% for personal, you can take that too. Automobile expenses are going to be a very big and important component for business expenses for car share owners. And the expense for the expenses that you'll be able to deduct will be arrived at using the ratio of the business miles divided by the total miles. And we also have your insurance payments, your lease payments, repairs, parking. Like we talked about before, you have telephone, if you have a CPA or accountant fees, or if you have tax software, professional dues and memberships. These are all examples of business expenses. If you have meals and entertainment, maybe you take, if you have a fellow driver that you take out for business and you talk about how to grow your business and what a great app Hurdlr is, then that's a deductible meal. Maybe you have to see a movie, or you have to take drivers continuing professional education. Those certainly sound like reasonable, ordinary, necessary business expenses to me. Maybe you have to buy things from office supply stores for your business. Maybe you need to pay extra for an internet connection, and maybe you need computers and printers. And as a car share business owner, you also want to make sure that you're keeping track of all of these expenses, especially the expenses for your car, like gasoline and oil, repairs, insurance, registration, licenses, parking fees, and tolls. Now we'll talk about ways to save money and pay less taxes. Like we talked about before, self-employed health insurance premiums are a great way to save money and also provide for any unforeseen health insurance health issues. And retirement planning is another way to save money and pay less taxes. As a sole proprietor or a single member LLC owner, you can deduct 100% of your health insurance premiums as an adjustment to income, like we showed you before. Also, COBRA payments also count for those who recently left their jobs. Now, for retirement planning is important because we may not have Social Security to fall back on, and not many companies have pension plans these days. So it's up to us to save for our own retirement, and the government wants to give us an incentive to do that. And one way they do that is with retirement plans. The most common include an IRA and a SEP IRA. An IRA is an individual retirement account, and for 2015, the maximum amount you can contribute is $5,500, and you can't deduct more than your earned income. And so as long as you have $5,500 or more of earned income, then you can make a contribution to an IRA. Now, just because you're making the contribution doesn't mean that you'll never pay taxes on it. This is a traditional IRA, or some people call it a regular IRA, and so you don't pay the taxes now, you pay the taxes later when you withdraw the money. And so when you withdraw the money, the contribution to the plan and the earnings are taxable. But hopefully, you'll be in a lower tax bracket when you're withdrawing the money, and therefore you'll pay tax at lower tax rates. Now, with a regular IRA, the contribution needs to be made by the due date of the tax return, which is generally April 15th of the following year. Now, there's also something called a Roth IRA. Now, the Roth IRA is a very good tool that folks can use to save money for retirement, but you won't be able to get a tax deduction for it, because the way the Roth IRA works is that you pay the tax now, but the contribution and the earnings grow tax-free. And so that when you take the money out, you won't pay tax. Now, with the way an IRA works, it's always your money, but if you take the money out of the IRA before you're 59 and a half, there's a 10% penalty in addition to the income tax that you'll have to pay on the distribution. Now, there are some exceptions to the penalty, like if you're going to use the money for education or for first-time home buyers. But generally, you don't want to touch the money that you put in your IRA. Lots of self-employed people also can consider something called a SEP IRA, and SEP stands for Simplified Employee Pension. Now, depending on how much you want to sock away, a SEP IRA, you can contribute up to $53,000 for 2015, or approximately 20 to 25% of your net income from your business. And so you would be able to deduct it on the first page of your tax return, like we talked about before. And it looks like that's all I have for the presentation.
Great. Thanks for joining us, Steven. Looks like we have a ton of questions coming in already, so let's just jump right into the Q&A. The first question is regarding deduction methods. One of our users wants to know if the standard mileage deduction is the deduction method that he should be using.
You get to choose which method to pick. And so in general, I think that the standard mileage method is a wonderful, wonderful method, especially if you're driving a lot of miles. So that's a great method. But it really depends on your individual facts and circumstances about whether you had a lot of actual expenses that would outweigh the use. But the good thing is that you get to calculate both ways, and you get to choose the higher, the one that results in the higher tax deduction. So I would encourage you to keep track of your mileage and do the calculation and keep track of your expenses and see which one is better for you.
Gotcha. Yeah, and at Hurdlr, we always tend to tell users that you want to keep track of every single thing that you have available to you. So keep track of all your receipts, all your expenses, all your mileage, and so you can see which one ends up being better for you at the end of the day. Maureen Jackson had an interesting question. What she wanted to know is when you were going over the section about the Form 1040, she is currently married and she files jointly, but she's the only person that drives in the family. How does the 1040 apply to her? Are there any things that she should be doing differently?
Well, if Maureen is married and she's filing a joint return, then if her spouse has income, then her spouse's income will be reported on the return, as well as her income. And her income will be reported on the Schedule C, most likely. And so the income will be combined. And when you have a married filing joint return, then that's all the income is reported together.
Gotcha. So Frank here, actually, he's been with us for a while. This is the second webinar I've seen him join us on. He had an interesting question regarding mileage. So Frank keeps all his mileage point to point. He tracks it on MapQuest log, and then records it in the Hurdlr app manually to store the logs. Hurdlr allows you to pull out reports and things like that. So when it comes time to do your taxes, you can use those to report them. What are the actual IRS requirements around reporting mileage? Are there any very specific set in stone rules?
Well, that's a great question. And I think that the Hurdlr app provides a really great way to keep all the information in one place. If you're tracking your mileage in the Hurdlr app and you're using the detailed method of kind of coding, everything that's for business, I think that should be fine. I think that um, remember that the mileage deduction, is 57.5 cents for every mile, and so you'll want to make sure that you have good records for the business miles that you'll be taking.
Mm, gotcha.
Now, and so if Frank is asking me whether I think that the printout from MapQuest showing the beginning point and end point for each trip would be sufficient for mileage. I think it's certainly a really great way to provide the amount of mileage for the trip, but there also needs to be a method for him to maybe write down the beginning mileage on the odometer of the car
Mhm.
for each trip to show that it's for that same car, and something that notes that it's for a business purpose.
Gotcha. Gotcha. Um, Great. Well, Victor here wants has an interesting question regarding uh, some of the charges that Uber charges the drivers. There's this fee that Uber charges called the Safe Rider fee. Um, is that something that is tax deductible? I'm not sure if you know much about that specific fee.
Well, I know that when I ride in Uber and even Lyft, I get charged as a passenger. I get charged a safe rider fee as well. So if it's the same amount or the same type of fee, then again it goes back to our rule that anything that's ordinary necessary for your business is deductible. So if Uber is charging you a fee,
Mm.
regardless of what it is, then it is deductible.
Gotcha. Wow, that's a very clear way of explaining things. Just to repeat that again, if Uber is charging you a fee as the driver, then it is deductible. Let's go back to the standard mileage deduction and actual expenses method. When deciding on either of the two, um, it's my understanding that there are a set of common operating expenses that are also deductible alongside either of those two deduction methods. Um, what are some of those common operating expenses that you can think of?
Well, I think that in the PowerPoint presentation we had a list of some of them. And if folks on the webinar want a
Mhm.
spreadsheet to fill out, I'd be happy to send them a spreadsheet. But you can keep track of your expenses and all of your actual expenses using the Hurdlr app. Now, for the actual car expenses, we'd have, again, anything that's ordinary and necessary for your car. So you have your registration, you have your license, you have repairs and maintenance. Um, if you're buying the air freshener, although I personally don't like to go in the cars with air freshener, that's just me. Um, Gas and tolls, they're all going to be, ordinary expenses that you can use for your car. Now, another, uh, thing that is very, very important when we talk about the actual expenses is going to be your insurance and any parking fees. And own your car, if you own your car, then you are allowed to depreciate your car, which is to take the value, the amount that you paid for your car, and take an expense against your on your tax return for a part of the car, in each year.
Gotcha. Gotcha. That makes
So
a lot of
obviously,
sense.
everyone's the amount that you can deduct is going to be, based on your, different facts and circumstances, and there are a lot of complicated rules. But in general, like we talked about, you want to calculate the mileage and then your actual expenses. You want to take the higher one.
Gotcha. Gotcha. Krish here has an interesting question, and I believe I know the answer to this, but of course, I prefer to hear you tell us. Krish says, "What if I drive two different cars? Will they ask you for a log of odometer readings for both cars if both of them are used for rideshare?"
The answer is yes.
Hmm.
So keep track of each car separately.
Gotcha. Great. How are we doing on time, Stephen? Do we have time for a few more questions?
Sure.
Great. Um, Chris just responded back, said thank you. I guess that explains things very thoroughly. Um, when when you are taking claiming certain things as tax deductions or business related expenses, is it really at the how is that going to be determined by the IRS whether you're kind of stretching the definition or if it is legitimate? Is should that just be at the discretion of your CPA or certified professional? Um, is there any point where the IRS is going to look at something and say, "Hey, you know what? That new phone or that iPad that you bought for your driving is not really something that we would consider being related to your business, and we think you're kind of breaking the rules here."
Well, I think the most important aspect of claiming business deductions is to keep your receipts. And some people get confused by saying, well, I have my credit card statement. And although having your credit card statement does show evidence that you incurred a charge and maybe even that you paid for the charge, that doesn't meet the IRS's requirements for record keeping. So they really want the receipt from the Apple Store for the iPad or the iPhone.
Gotcha.
Now,
And does
regarding your question about whether the IRS is going to say, well, why would someone who's driving a car need an iPad? Well, again, you want to make sure that you're covered because ride share is new. It's a new thing, and the IRS may not be taking ride share. So if you were selected for an audit, you have to assume that the person who is doing the audit may not be familiar with exactly what your business is. They may not understand how someone can drive a car and and earn a living. They may not be used to that, right? They're used to doctors, they're used to pharmacists, they're used to bankers. So the person who's doing the audit may not understand your business.
Mm-hmm.
When I was in my ride share this morning, the driver had an iPad, and it was talking to him, and he was talking to it, and so it was that's what you're using on a daily basis. And so if you're using the iPad for your business exclusively, then you could take the position that it's 100% for business use. Now, if you don't have a lot of income from your rideshare business and you only do it from time to time, then it it may not make sense to an IRS agent, or even to yourself if you looked at it objectively to say, I had $100 of income from my rideshare business and I spent $10,000 on computers and equipment and iPads and things like that.
Yep. Gotcha. That makes perfect sense. Frank wanted to follow up on the previous question that he asked regarding keeping track of mileage. He mentions what he says is that do I have to keep an odometer reading for each day I travel and work for Uber? For example, doesn't the mileage that I report along with the time I worked meet the requirements?
Can you repeat his question?
Sure. It seems what Frank is trying to say is he keeps does he have to keep the actual odometer reading in order for his mileage deduction? Doesn't the just telling recording the mileage and reporting the times that he worked satisfy IRS requirements?
It's it sounds like the information that he has would be sufficient because on line 44A of the form, we're looking at the number of miles, but it's going to be very helpful to have an odometer reading somewhere. So I would say yes, because it doesn't sound like he has an odometer reading anywhere. It just has the number of miles. Is that right?
Yes, number of miles, times, and GPS related data.
Right. I would keep the odometer reading because if he's driving a new car and it has 4,000 miles on it, the IRS may want to have some way of having Frank document that he has used those miles for the particular car that he is deducting the mileage for.
Gotcha. Gotcha. Chris wants to know if um, we can deduct our lease payments on vehicles that we use for work.
Yes,
Gotcha. So
that'll
they
be part of your actual expenses.
gotcha. So they use a service like Breeze or one of the many services that offer leases specifically for rideshare. Then they are able to deduct those payments on their taxes.
Right.
Great. Let's see if we have any more questions. I think that's all we have. Um, does anyone in the audience have any more questions? We'll take one or two more questions if there are any, and then we'll close things up. Okay, it looks like we don't have any more questions, and I'm just getting a lot of thank yous from our attendees. Steven, thank you so much for joining us here. I know you mentioned that the webinar overall was very boring, but I think our attendees will agree with me in that this has been Absolutely wonderful. And Frank here is asking if you can sing for us, but I'm sure you don't have anything prepared right
Well, actually, I can go outside my office and get my guitar.
now.
Sure. If you guys have time for a song, I'd love to sing for you guys.
Sure, go for it.
And I'd like to thank everyone for listening in on the webinar. And feel free to reach out if you have any questions. I was sitting in my office reading the taxation rules when a brand new client walked in and said he heard that I was cool. I'm a few years late in filing, Uncle Sam wants my ass. So I told him to sit down, we can fix this fast. He asked me how many returns I'd filed with my own hand, and I said, listen, I have filled out every form in this here land. Filled out every form, man, filled out every form, man, before you were born, man. I've been well informed, man, like a raging storm, man, filled out every form. Complied with Alabama, Arizona, Arkansas, California, Delaware, Florida, Colorado, Georgia, Massachusetts, Idaho, Michigan, New Mexico, Indiana, Louisiana, Minnesota, Ohio, Kansas, Mississippi, Oklahoma, and Alaska, Hawaii, New York, New Jersey, Kentucky, and Nebraska. Filled out every form, man. Filled out every form, man. Before you were born, man. I've been well informed, man. Like a raging storm, man. Filled out every form. If they want federal tax, state tax, city tax, gift tax, sales tax, use tax, state tax, payroll tax, property tax, gas tax, Medicare, AMC, capital gains, transfer tax, and Social Security, luxury tax, sin tax, school tax, kitty tax, excise tax, franchise tax, workers' compensation tax, filled out every form, man, filled out every form, man, before you were born, man, I've been well informed, man, like a raging storm, man, filled out every form. Give me your W-2s, dividends, stock savings, pensions, mortgage payments, unemployment, self-employment stipends, travel meals, entertainment, bankers, gratuities, dependent care, and your health care, donations to charity, IRAs, real estate, and your 401k. Give me everything you have, and I'll make sure you don't pay. Filled out every form, man. Filled out every form, man. Before you were born, man. I've been well informed, man. Like a raging storm, man. Filled out every form. Filled out every form.
All right. Thank you very much, Stephen. Thank you for taking time out of your day for this webinar. For all of our attendees, regarding the question you asked about recording, yes, this webinar and the Q&A are both recorded. We will do a couple of edits on the videos, and then we will have them to you in the coming days. If you have any questions for Stephen, you can reach Stephen at steven.zelin@thesingingcpa.com. And if you wanted to reach myself or any of my team members at Hurdlr, or try the Hurdlr app, it's free, so you have nothing to lose. Feel free to email me, sajad@hurdlr.com, or grab the app from the App Store and Google Play. Thank you for joining us.